Hey, I'm Ashur Benjamin. I'm a loan officer, I'm an educator, and I'm your go-to resource for making smart home buying moves. Whether you're a first-time home buyer or you just haven't bought in a while, asking the right questions can make the difference between a great deal and a financial mess. So here are the top 10 questions you should definitely ask your lender, but you probably aren't. Question number 1, what's the total cost of the loan? Not just the rate. People love to shop for the lowest interest rate, but that's just one small piece of the puzzle. What you really want to ask is, what's the APR? What's the annual percentage rate? And it includes lender fees, points, and closing costs wrapped in. Sometimes a lender will show you a super low rate, but when you look at the APR, it's way higher, and it's because they buried fees in there. Always compare APRs and the total fees when rate shopping, not just the rate itself. For more help on this, I did make a video that breaks down your loan estimate and what fees exactly to look for when comparing for quotes. Question number 2 kind of goes hand in hand with that. Are there any points or even lender credits being applied? This one gets overlooked a lot. Lenders can charge you points up front to lower your interest rate. 1 point is equal to 1% of your loan amount. So if you have a $400,000 loan, 1 point is equivalent to $4,000 that you'll have to bring towards closing. While you're shopping around, ask your lender, ask your loan officer if the rate that they're quoting includes points, because it might sound great, but if you're planning to sell or refinance in a few years, you'll never make that money back. What I mean by that is, let's take that example from earlier. Let's say you did pay $4,000 in discount points, and that $4,000 that you paid up front might have lowered your mortgage payment $30, let's say a month. Well, how long would it take to break even or recoup that $4,000? Well, $4,000 divided by 30 is over 133 months. What does that mean? That means if you were to sell or refinance within 133 months, you technically got the short end of the deal, and it might not be worth it to buy it down at that state. Now, flip the question. Are they giving you any credits to help with closing costs, and in exchange maybe giving you a slightly higher rate? Both options are fine. You just want to know which one you're getting, and you always want to look at the details. Question number 3, and this one could be one of the most stressful pieces that you should know before getting into a contract. What is your turnaround time from application to close? In a competitive market, closing on time can make or break a deal. Not only that, if your offer says on it, hey, we can close in 3 weeks, that's a stronger offer than someone who says 30 days or nothing at all. So remember, you need to ask your loan officer, how fast can you get a clear to close? Some lenders, unfortunately, do take 30 to 45 days. Others, like the ones I work with, traditionally we do it in 15 to 20 at the high end of things. It of course does depend on the file, it depends on the loan type, but if we're just talking a standard FHA or standard conventional VA loan, 15 to 20 days, no problem. And kind of reiterating what I said before, if you're submitting offers and the seller wants a fast close, having a slow lender could cost you the house. Make sure you're working with someone who moves quickly and ask them to show you a recent file timeline. Question number 4, do you have an underwriting, an application, or processing fees? These are sometimes called junk fees. They're really just administrative costs that some lenders have to charge, right? They have underwriters they need to pay. They have processors they need to pay. These can range from $500 to $1,500 or even more. Now, it's not always a bad thing, like I said, but when you're comparing quotes and offers from one bank or one loan officer to another, you want to compare apples to apples. This administration, underwriting, processing fee, those all play a part in that. For example, one lender might offer no lender fees, but give you a higher rate. Another might charge you fees, but offer better rate. The key is to ask for a loan estimate, and once again, review it line by line. And if they won't explain it to you, that's a red flag. This next one might seem obvious, but I've seen people sign for an adjustable rate mortgage without realizing that their rate can actually change in a few years. So, another question to ask is this a fixed rate for the rest of the loan, or is it adjustable? And if it's adjustable, ask them, how long is the fixed period? What is the cap on increases? How often is it going to adjust, or can it adjust? ARMs can work for the right borrower in the right situation, but you don't want to surprise 5 years into your home purchase when all of a sudden your payment jumps $500 a month. Number 6, and please, please, please do this one. Can you explain my monthly payment breakdown? That monthly payment number can be misleading. Ask your lender to break it down. Principal and interest, what are you paying for that? Where did you get property taxes from? How'd you get that homeowner's insurance number? Is there any private mortgage insurance, depending on the loan type or how much down you put? HOA dues, if you're buying a condo or in a neighborhood with an association, have them break it down. I've had clients think that their payment might have been around $2,000, but after everything was added up, it was closer to $2,800. Well, why was that? It's because the person they were talking to before was just giving them the principal and interest payment. They didn't factor in taxes, insurance, mortgage insurance, and HOA. You don't want to be shocked when that first bill hits, so please ask for a full breakdown, preferably at the front of the process. Next question to ask is, what's my estimated cash to close, including everything? Remember, down payment is just the beginning. You'll also have closing costs like lender, title, and escrow. You might have some prepaid items like taxes and insurance. You might have to put some reserves on the side, requiring 2 to 6 months of mortgage payments and savings. So you gotta ask, what's the full dollar amount that I need to bring to the closing table in order to close successfully? Also ask, is that number gonna change? Good lenders will typically give you a conservative estimate so you're not scrambling at the end. Another question is, what's the penalty if I pay off the loan early? I know this one shocks people, but some loans, especially non-QM or investment loans, have prepayment penalties. That means if you sell, refinance, or pay off the loan early, you could owe an additional fee that could be thousands, if not tens of thousands of dollars. So ask, is there a prepayment penalty? If so, ask them how long does it last for? Is it for 1 year, 3 years, 5 years? And how much is it? Even if you're not planning to move, life happens, so protect yourself. Now on primary purchases, if you're going to live in that home, odds are you're not going to encounter this, but once again, better safe than sorry. Another thing to ask, especially right now while rates are a little higher when I'm recording this video, is what happens if rates drop before we close? Can we float down? Let's say you lock your rate today and next week rates drop 0.5% for your scenario. Some lenders do offer what's called a float down option. It's a one-time chance to adjust your rate downward after your lock. Not all of them do, however, so it's important to ask that question up front. Ask them, do you offer float downs? Are there rules or costs involved? Not every lender has this, but it can save you a lot if you time it right. And now the last question you should ask your loan officer or your lender is, what types of loans am I eligible for, and is this one that you're quoting me the best one for my situation? This one's huge. Some lenders are quick to quote FHA because it's easy to qualify, even when a conventional loan might be better long term. You want to know, what loan types do you qualify for? Why are you recommending this one over others? Are there programs I might be missing, or a first-time buyer credit, or down payment assistance, or other niche options? If your lender can't explain the options clearly, they're not doing their job. Look, you don't have to be a mortgage expert, but asking the right questions puts you in control. And if your lender gets defensive or vague when you ask these things, you might want to keep shopping. I'll always answer these questions directly, honestly, clearly, because it's your money, your home, and your future, and it's not something we want to mess around with. So hopefully you found that useful. 10 questions to ask your lender or your loan officer when applying for a mortgage or shopping around for mortgages. Please don't forget to like, subscribe, and comment if you have any questions. I'll see you in the next video.